right now revenues are scarce. And as a result, we've made a lot of cuts at the state level that are affecting people in a wide range of ways. And so part of the interest in this is certainly the implications of any, there's a saying that one person's tax break is another person's tax increase.
Right.
So the reality of these subsidies or of these so-called tax expenditures is that when we give a break or preferential treatment to one group, it likely means that somebody else is going to have to pick up the cost of that.
Right.
And so, that's one perspective we bring to the table. The other perspective is just from a good governance perspective. Again, the public resources are ones that we should honor and do everything we can to make sure that they're being used appropriately. And one way in which we do that is having transparency in where the dollars are coming from and where they're being spent. And also some measure of accountability. These programs, whether they're property tax relief programs for individual homeowners or property tax relief programs for businesses, are all predicated on some perspective that they provide a good.
Right.
In the case of individual homeowners, it allows them to not pay an excessive amount in property taxes, and it allows them to stay in their homes. In the case of a business, certainly there are arguments that these tax breaks are important either to improve the competitiveness of the state, to attract businesses and retain businesses, or to grow jobs. And so, the reality is we don't necessarily know the answer to some of those questions or how well we do that, and this seemed like an opportunity to at least bring to bear both concern about where are these revenues going and what are the implications elsewhere in our tax code, and also how well are these programs actually working and what can we do to make sure that they're accountable going forward.
Excellent.